Hey, what's up everybody, Bueller here again, and I'm going to be covering the TA routine, the technical analysis routine over ZM today, Zoom video. So we're just going to get right into this. If you haven't checked out the past live stream on that, please make sure to do so. It really does help you set up really good trade plans. You just got to go through the system. And I'll, of course, send another playlist of more videos to these, and I'm going to, of course, try and release more videos on this channel using this method. But let's get right into this. So using the weekly time frame, we're going to start. We're going to mark the top of our range. So I want to get the top right there. And then I'm looking over here for another kind of base level. So I'm going to be looking for another emerging candle that ends up being used as a support from current price history. So that looks really good. I like that I have that there and that it lines up. So now I have my range to start from. So now we can go down to the daily. And we can focus on this left side here first. So what I'm going to be doing is marking more emerging candles. An emerging candle is a candle in which pops to a new spot or has a spike in volume. Really, you're just in a short term, you're pretty much just marking the tops of your buyer candles. But you want to start from the left to the right like a book. Therefore, you don't have to do all that other, ugly drawings over here on the right. You can kind of have most of everything here. So I'm kind of just focused on, what candlesticks got us out of the mud. So we fell into the mud down here and pushed up. Got another resistance there, and I'll mark this gap range. So emerging candles and gap ranges is pretty much all you're marking on the daily. I'm going to zoom over to the right, and you can see price is actually bouncing in between my levels very perfectly. So we can actually back this out and let's see if we miss anything. So you can see there is a pretty nice range between here. Let's see if we can see anything right here without making anything up. You never want to make a level up. Right there. I like that I have a supporting candle there, there. We fell from there. Resistance. We end up holding above it. So it's touched many, many, many times. You want to have something touch at least 2 to 3 times at least. So I also like this spot. Good gap range. Good support of another gap range. Another support where we broke down again. So I already have another good level there, and we can probably add on this one as well. I like the resistance right here. Resistance, support, resistance. So I like it a lot. Zoom over to the right. And I like to go to the 4 hour to get my trend lines. This is the most accurate time frame really to get your trend lines because you have both extended hours and your intraday analysis going. So I'm going to just grab me a good, click the right one first. Grab me a good support down here, and what you're looking for this as well is for at least 2 to 3 touches. So right there I have 1, 2, 3, 4, 5, almost 6, and we're fighting with it on the 7. Looks like we're trying to retrace down. Okay, as you can see here also, pattern recognition. Let's go back to the daily. What we have right here is a dark cloud cover. So that's just kind of going over what I'm looking at. And again, just to mark up that 50%, just to see what happened there, you'd mark your open to your close on the meat of the bone. Mark your 50 just to confirm it's past the 50% control point, and it is. So that's definitely a dark cloud cover. Next day we gapped down on top of the trend line. Next day we kind of had a reset buyer day, kind of having a slow red day again. This is starting to look really good for puts to the downside, and I haven't even gotten down the time frames yet. So we have our 4 hour marked. We like how that looks. Let's go to the 30-day, 30-minute now. Make sure you don't have any other levels to mark. Sometimes you'll end up seeing more like right here. Pretty common resistance, and then it was turned support right here. So very good level in between there that I didn't have. Another one right here, good resistance, turned support before it pushed up higher. So that's very nice. So now trade plan. Let's just go into this as a day trade plan first, and then we'll look at it from a swing trading aspect, or a swing trading point of view, sorry. So right here. Also, hold up, last thing. Pre-market high and low, you're going to want to mark those. You're going to want to mark that high, and you're going to want to mark that low. Right there, just instantly, this is your initial range of trading. So as you can see, price definitely looked bearish in the first 30 minutes of the day, but also not super bearish as it is still holding above the previous day lows. So let's just look at our day trading plan right now. So right now, I would set up and say, well, first you want to type the ticker, and then type above, let's say, 382, or you could say 381.75, and then you're going to want to target 385, and then bam, you have your first trade plan right there. So above 381.75, you can target in the middle of this range or that 385. Let's do a below. Now you have below 379s, or you could say 379.15, whatever level helps you a little more. I do like to do the psychologicals, but if I see it 19 cents on a stock like Zoom, I'm just going to bump it down to that flat number. And then we can do target, and of course the level in between is going to be that 375, but we're just going to go ahead and say 377.50 because that is a very good psychological number, and then 375. So now we have our trade plan from the day trading point of view, just from right now. And of course, this would of course be better if you were, the market wasn't open and it was like right here. Then you could create this trade plan before the day opens. So of course you want to do that, but this is a good rundown on what you could do end of day. So let's also go look back down here on the daily, and let's make a swing trading plan. So Going off of what I see right now, I am bearish. I don't like the lowering volume right here, but that doesn't matter right now because we've broken under and we're having a very, very slow rollover. So what I see is a 50-50 scenario. We're not in a super bearish spot, but we're also not holding above that trend line anymore. So what I see this as is a continuation. No, there's no spike in volume. There's nothing that really helps us out with that. And this right here doesn't help us out either, having the lowering volume. If this had been rising or we made a new low and held under, that would be awesome. So end of day, if this candle holds under this low of day, this will look good for a very good swing trade. We can take next week at the money strike. So let's say 380 puts, we can grab them for next week's strikes. And then we'll take that, and your stop loss would be, guess what? The outside of your pattern. So let's say your stop loss was here. That would be considered, or I'm sorry, right here. That would be considered a loose stop loss because that is the outside of the pattern. Anything past this is you gambling, okay? So that's worst case stop loss. Next kind of tighter stop loss you can do is a midpoint of that previous day, kind of like you saw me grab on that previous day candlestick pattern. But I hope all this makes sense. I hope you guys enjoyed both the day trading and swing trading kind of point of views on everything. And I hope you guys really like this price action stuff. I'll make sure to do more videos of this, and I'll see you guys in the next one. Thank you.